Hello, everybody, and welcome to this episode of Risk Matters with the title of Modernizing Digital Identity and Trust. Today, we will be talking about the verifiable legal entity identifier, and we have a very esteemed panel with us. In Stockholm, Anders Ahlström, who is the CEO of the global vLEI, Alexander Kech, who is the CEO of vLEI, which is the organization that oversees the legal entity identifier world. And in New York, Elizabeth McCall, who is a very well-known consultant and ex-regulator, and she's worked both at the ECB and with the regulatory authorities in the US. We also have a panel of experts with us: Klaus Norgren, Richard Israelson, and Ivan Mortimer Schultz. The importance of digital trust cannot be underestimated given what's going on in the money laundering world, the size of which is now estimated to be over $3 trillion per year. In addition to that, of course, we have the number of frauds and scams, which are now at about $500 billion a year. I think the exact number last year was around 485 billion. And obviously, new tools such as the vLEI will play an important part in trying to mitigate some of those risks. Today, we will cover 3 segments in this discussion. The first being the digital identity challenge, and I will give it over to Anders to get us started on that. And we agreed to discuss 4 points on this. The first is security and risk in the digital era. The second is the counterparty identification as the core of digital trust. The third is technology as both the risk and the mitigant. And the fourth is digital services and trust.
Yes, hello. I would like to start addressing this more like a time journey than anything else. I think if we look on where we are now launching vLEI, it comes quite natural to the history of LEI, which basically starts in 2008 when we had the Lehman crash and the discussion came up, who can you trust? On a corporate level, we and the vLEI took it a big challenge to set up, first of all, a solution to be able to guarantee that a corporate was a corporate. And that worked quite nicely, and we have worked extremely hard in the world to facilitate that. But we also came to the understanding that we also need to understand who is actually acting on behalf of those corporates. So the vLEI has worked extremely hard in finding a technology solution that is global, that is also not breakable, in order for us to facilitate that. And that's what I would like to start as my first comment. Then, of course, it is a lot of technical aspects of this which has both helped and being a problem for us. We buy more efficient computers. We get the crypto problems that everything can be broken. It's very easy to be hijacked on emails, etc., etc. And which means that we need to find technical solutions that will be strong and secure and give us the possibility to work on a global basis without meeting people person to person. If we then go to when it comes to KYC and also know your business, I would say that we have been also within our company group working quite hard with that for the last 5 years, and we see also the need for digital certification of people and trust and both on corporate and customer related solutions. So it's in every different context, not only as a company, but also on a person-to-person level. So with that, I think I will stop right now, and I'll come back later on with other comments that will probably arise.
Thank you, Anders. Just to note that I understand that the global vLEI is the only company within Europe that is authorized to issue verifiable legal entity identifiers.
Currently, there are five bodies that can actually provide the QVIs or vLEIs and issue them. And there is only one in Europe, and that is our company. Yes, that's true.
So I guess it's a segue to go to Alexander to give us the broader perspective from vLEI. And perhaps as well, Alexander, for the benefit of our viewers, if you could just outline the mission of vLEI so that it's clear in everyone's mind what it is that the organization is responsible for.
Absolutely. So the Global LEI Foundation was created about 10 years ago, a bit more than 10 years ago, to manage the LEI system. So what does that mean? To accredit LEI issuers, so companies who will be verifying the existence of companies before issuing an illegal entity identifier to them, and do that very important step of verification and aggregation of data. And the QVIs, the qualified vLEI issuers, so to qualify the entities who are allowed to issue vLEI to those entities with an LEI. So we managing the LEI system, we governing the LEI system. We are overseen by a regulatory oversight committee who ensures that what we do is in line with the public good mission that the vLEI has been given as a non-for-profit Swiss foundation. And we have a board of directors that supports us with strategy and outreach to various industries where the LEI is used.
Thank you very much, Alexander. So, Elizabeth, using your dual hat, I guess, because you are both an expert in banking in the private sector sense and, of course, a very experienced regulator, what would you add to what was just said?
I would add that I'm very impressed with the foundation's work. I've had a chance to review the Financial Stability Board's progress report recently, and interestingly, it showed that the highest adoption of the legal entity identifier was in Europe, with 66% of active LEIs globally having been adopted. So there must be something to the secret sauce of the foundation in achieving this important goal. They also note at the FSB, of course, that much still needs to be done to have a single roadmap in place, the way that the G20 laid out originally after the great financial crisis. It's of paramount importance that trust be at the foundation, be the bedrock of securities transactions, of counterparty transactions, and identifying the entities that are involved in those transactions is utterly key. The backdrop where we're meeting today is, of course, one with a world characterized by, let me say, quite rising geopolitical risk. And in that context, having trust of transaction identity is absolutely key.
Thank you, Elizabeth. Just a broader question about how you see the stability of the current ecosystem and its ability to support the goals that we just talked about.
You know, it's important, I think, also to point out, besides operating in the context of rising geopolitical risk, there is also a risk of much deeper fragmentation, which, you know, is, if you look at the various issues that have occurred leading to financial instability in the world, it's always the gaps in the regulatory framework that are a culprit, and fragmentation is definitely the protagonist in that picture. So my worry is, of course, that projects such as the global identifier, legal identifier, become sidetracked in some way because, you know, it's something that fragmentation doesn't support. So, you know, and meanwhile, of course, when you're in an increasingly fragmented marketplace and one that is characterized by rising geopolitical risk and all of the technological advances that are taking place, of course, in the crypto world, we need to have verifiable information, and we need to have a financial system that operates on a bedrock of trust based on knowing who the counterparties are and being able to assess what those exposures are.
Thank you, Elizabeth. Anders and Alexander, anything to add from your end?
I would say that on the fragmentation part, I'm generally optimistic as a person, and I see actually an opportunity for LEI in that context as well. Generally, when you look at the need for identification of organization, it's pretty much a component, an essential component of every agenda, every political agenda. Whether you want to control access to your market, or whether you want to expand access to your market, whether you want to know who is my enemy or who is my friends, and act on enabling verification of entities that interacts with my entities in my country, for example. You can't rely on your own identity system because it's not adopted by others outside of your country. So you need to be able to rely on a global system, and that's what the LEI provides. So we do not see, for example, if you're asking on whether there is already an impact on our activities from the fragmentation and geopolitics, we do not see any impact at this stage. Actually, on the contrary, where we see part of the world wanting to leverage the LEI to enable their policies, regional or country, and the same applying on the other side, where that you could consider potentially as the confronting, or the other side that doesn't want to talk to the first side I was mentioning. So it doesn't slow down things; it's actually accelerating things, and especially knowing that technology, as mentioned prior, is not fragmented. Internet is internet. It still works despite geopolitics. The rise of digital assets and blockchain, for example, is also by nature a global tool like the internet. And in that area, that world, there's a lot of conversations around organizational identity and how verifiable credential can support the adoption and acceleration of adoption of such technology, across fragmentation, so from chain to chain, from infrastructure to infrastructure, and we will discuss that later, but the vLEI has been built to be interoperable, to be agnostic of technology, agnostic of geographies, agnostic of platform.
I would also like to comment that regarding fragmentation, that I think one of the big benefits is actually that the whole system now has been proven for the last 12 years. We have half of the work is done. We have the LEI system quite in operational mode. For any others to come in and divide this and conquer, they need to come up with a solution that will actually be better than what we have currently. And I think it has shown for the last years that we're just increasing the numbers of LEIs being issued, which is the foundation in itself for a vLEI to be issued. So from that point of view, I feel quite strong that from a global perspective, this will be something that will just be stronger and stronger.
Great. If there are no more comments, then I think we can conclude the section and move to part 2, which is another very interesting topic around the launching of the vLEI. And Alexander, as the head of vLEI, can you kick this off? And we've sort of noted several points here. One is around management and operation of the vLEI. And the utilization by banks and financial services. The other one has to do with governance and oversight, and the experiences that we see from early adopters. How do you see all of these things evolving, and how far have things come so far?
Sure. So let's start by saying that the vLEI system is relatively new as an architecture, as an infrastructure. It has been, the root of trust has been established about 2 years ago, I believe, a year and a half ago. And the last year and a half, 2 years, has been around evangelization, so explaining the system, the benefits of the system, and trying it out through proof of concepts and pilots. And now we are getting into a year of progressive adoption, keeping in mind that this, as any new technology, it will take time. It's not something that will overnight replace digital certificates, X509 certificates, for example. It will take time because it's a new technology, but we have a good traction everywhere in the world with various use cases where this technology brings a lot of benefits. The way the vLEI system is organized is that it's a decentralized system, in a little bit like the LEI. GLIFE is the root of trust. I remind the auditors of what GLIFE is. It's a non-for-profit foundation, not a commercial initiative. It's overseen by 70 regulators from 50 countries all around the world. And it has this neutral public good mission that makes it probably the best root of trust you can have for that type of needs globally. What is important as well is that the vLEI is the only, and I say the only, decentralized identity and verifiable credential system that ties individuals with a company. When you look at the other protocols or technical standards out there, they're either very good at identifying individuals and credentials around individuals, like driving licenses, etc. They're very good at identifying a company, providing proof of existence through an e-seals, but none of them are bridging cryptographically individuals acting on behalf of a company and a company. And that's the uniqueness of the system, and that's its strength at the same time. So this root of trust and that architecture I just explained are run in a decentralized way through qualified vLEI issuers who all over the world ultimately will be responsible of verifying the existence of a company through its LEI and also through a key ceremony to ensure security of delivering of credentials to that entity. And then what is also very strong is that the entity itself, once it has its vLEI package, as I call it, can start issuing and revoking their own credentials to their staff, to their clients, why not as well, as the people engaged with that company could also receive credentials, can really use and very autonomously the system without having to always go back to a third party, for example, for issuance and revocation of credentials. So that's how architecturally it has been built, the most decentralized as possible, the closest to the legal entity as possible, to ensure autonomy of usage, and while relying on a very, very strong governance framework, a strong root of trust, the global LEI system. So in terms of use cases and usage of the vLEI, that's what amazed me every single time I look at it. It's that there are so many use cases, and the challenge will be to actually focus on the right ones. In the banking sector, obviously, everything around KYB and also securing of transactions, for example, is one that we've identified. I think the first obvious one is avoiding impersonation. Really, it's all about we more and more digital, we're more and more global. We rely on our phones, we rely on our computers to do business, to pay things, to receive information, and at the same time, the more we become digital, the more impersonation, fraud, and people attempting to pretend they are a bank, for example, or a business or an individual in a bank is increasing. And if the vLEI is very good at, it's really to avoid that. It's to ensure that when you are talking to a company or interacting with a company on a platform, or an individual pretending to be working for that company, you can autonomously, verifiably prove it is the case. And that's really the strength where most of the use cases will come from, is that need to avoid.
Alexandra, I just have a quick question before we give it over to Anders. What has been the reaction of the banks, let's say? I mean, sometimes they're sort of resistant to change. Is it that, or do they understand how valuable and useful this is to their business?
Well, all the banks we're talking to, or market infrastructure as well, for that matter, like exchanges or exchange groups, they definitely see the value of having such a tool put in place. Even just, for example, in the case of exchange groups, as a way to authenticate their customers when they connect to their system in an easier way than today, which is login passwords and a very centralized, complicated administrative system for giving access to specific type of transactions, specific type of systems. They like the idea of having this portable identity for companies to be used as a single sign-on, if you wish, into systems that they open to their customers, and they like the idea that they can control more easily who in that corporate customers, for example, can sign transaction over 100 million or over 10 million, while today this is very this is managed very administratively, manually, with a lot of errors and mistakes. So they see the benefits. Now, of course, as you rightly said, banks are banks, and they take time to adopt technology. So that it will be definitely our challenge in the coming years, is how do we ensure that we have an acceleration of adoption? And that's why we establishing partnerships, both on the technological side, but also with our QVIs to develop those use cases, to test those use cases with those banks, but also with consultancy firm to enable them or equip them to be able to explain to banks how to implement that system the most efficiently. And without those partnerships, Glyph, which is a small company of non-for-profit foundation of 70 people, will not be able to do anything, right? So it's about partnerships. It's about enablement through partnerships, and it's also about multiplying the effect through industry groups, industry associations, explaining and proof of concepts and pilots in the coming years.
Thank you, Alexander. I'll give it over to Anders. Obviously, having this unique position in Europe is very positive at the moment. So please give us your outlook on this subject.
I would say that a lot of things has been said rightly by Alexander so far. And from our point of view as being a QVI, it is slightly different, of course, because also the market reach is both geographic and from a knowledge perspective, what you come from. So from our own perspective, and I think we will see much more of that certain QVIs will be more into trade finance or will be more into other kinds of knowledge spaces, just to ensure that we can create the best solutions. But most of all, what I would say is that the important part here, which we tend to forget, is that this is a global solution, and think about all the other kind of solutions that we've seen on the market that we're talking about. They are European, they are Asian, they are Swedish, etc. But in this case, we actually have a technical solution and also a proven solution that works on a global basis, which absolutely will increase the possibility for global trading, which is, of course, the best way forward. So I think that is something not to forget. We also use a technology which we are quite familiar with all over the world, which means that there might be others, there will be other QVIs that can participate in this journey altogether, so that we can create solutions cross borders, cross nationalities, cross different large geographies. So that is how we, as a QVI, see the world coming on.
Anders, what are some of the numbers so far in terms of the number of organizations that will have to implement this, let's say, by the end of the year?
Oh, I don't have those numbers. I know our numbers. What we have.
Tell us your numbers. No, these people can get an understanding of the market.
But let's say like this, that this year is a very much a pre-sale year. We have working solutions nowadays. We don't have just theories. We have proven them in pilots, like Alexander explained, on a successful rate. We know that we can deliver. It's just a matter of trying now to find the right project to actually focus on. And that will take us a while. I would say that my guess is that we will find the first client solution being built sometime in late Q4.
Elizabeth, over to you.
Thank you. I would simply add that, this is a very important aspect for regulatory coherence. And in spite of my comments earlier about the fragmentation, I agree with my two colleagues that the fragmentation that we're experiencing in the overall marketplace is actually a catalyst for moving ahead with this project. The basis of supervision is on clear, accurate, transparent information. And this is what allows financial markets to operate coherently and to overall reduce risk. So I'm delighted to hear that there's been significant progress being made on adoption and on more verifiable information being made available.
Thank you, Elizabeth. And we'll talk in a minute or so about the regulatory aspects as well. I wanted to give the opportunity to Ivan and Richard or Klaus if there's anything more to add before moving to the next segment.
I can start a little bit talking about the ecosystem, just like Anders said previously, that when we became a QVI a year ago, we were ready to do everything around the core competences and the core functions to actually issue verifiable credentials, cryptographically bound, etc. And today we have an ecosystem. So we have solutions for any use case or focus area to be able to electronically sign any file or document, use the vLEI credential to log in to central or bespoke infrastructure. And in addition to that, excellent customer portal. So once we have a customer, a large legal entity, let's say, or a large bank, they want to self-administer all their verifiable credentials for their hundreds and thousands of staff. And we have all of this now as part of the ecosystem. So we're very much ready for practical rollout for prospective clients.
Thank you, Richard. With that, we can move to the third and final segment. We will start with Elizabeth in her capacity as an ex-regulator. And we have 3 points here to discuss. I think let's start with the first one, which is the opportunity in the financial sector and beyond.
Thank you. It's very interesting to me to just take the step back and understand, what was the genesis of this whole undertaking, this whole project. And the genesis, of course, was the great financial crisis in 2008. And at the root of the great financial crisis was deep concern about exposures across the marketplace, leading to the collapse of a number of different institutions and the need for bailing out and supporting large institutions globally. Trust broke down during the great financial crisis about counterparty credit exposure to some of the largest institutions in the world. So the thought was, of course, and adopted by the Financial Stability Board, and then very much supported by work with the Global Legal Entity Identifier Foundation and the Regulatory Oversight Committee, to put in place a roadmap for faster, cheaper, more inclusive, and more transparent cross-border payments, so that overall financial stability would be ultimately protected. I lived, of course, through the events of 9/11. I was banking superintendent in New York when the planes flew into the Trade Center, and that occurred, of course, in 2001. I wondered, why did it take us to the great financial crisis to realize that we really need to have far more verifiable information about legal entities that are using the financial system? It's about financial stability, of course, and that was proven in the great financial crisis, but it's also about preventing the financial system from being used by terrorists, so that we have a deep understanding of what's going across the financial wires in the world. So if you fast forward to today, these standards were adopted in 2008. The FSB published just recently a progress report. There's still much work that still needs to be done. And if you look at the current market dynamics, there are so many components that lead you to the conclusion that we need to speed up the work on this. The first is, we're living in an environment where there's been tremendous growth in the private credit markets. The non-bank financial institution market has grown exponentially since the great financial crisis. It's grown in such a way that we do not have clear line of sight into what the transactions look like that those entities are undertaking. We don't know where there's duplication of credit exposures on the balance sheets of the non-bank financial institutions and on the balance sheets of the large supervised institutions. We do, and these are the factors that, of course, led to the correlation risk that another another very significant issue that I lived through was the collapse of long-term capital management, then the largest bankruptcy in history. And long-term capital management was a hedge fund that was undertaking market transactions and then, of course, borrowing from the largest financial institutions in the world to support its operations. The banks looked at long-term capital management as a credit risk and evaluated it as a credit risk and never considered the market risk correlation of the trades that long-term capital management was undertaking that matched some of the exposures that were on the balance sheets of the banks that were providing the lending. And this correlation risk is what led to the need for the largest private bailout in history to date to take place to prevent collapse of institutions. Long way of saying that clarity of exposures to understand where there is correlation risk developing and growing in segments of the market is an essential component of the transparency that we need to prevent financial instability and the collapse of large institutions. So the first need I see is in having more reporting and more understanding from the non-bank financial institution market. The second is the counterparty risk that across the large banks, so that there's faster and more transparent information. All of the reasons that these things were put in place for the subprime crisis. So needing to move ahead with financial reporting projects like the one that has been spearheaded by the European Banking Authority is incredibly important. European Banking Authority has been mandated to put in place centralized prudential disclosure data from all of the European Economic Area institutions, starting with the large ones as of June 30th in 2025, and the project will be fully operational by 2030. The project envisions a data hub where all financial disclosures of the supervised institutions will be gathered, and it'll facilitate the access, the usability, and the comparability of the data. And the European Bank Authority will be delivering the information that is delivered to it by these institutions directly into the marketplace. So there's a pilot that's been taking place using the virtual legal entity identifier product. This is I think a very important project to follow to understand if this is going to be the most robust way of approaching this component. And then I mentioned thirdly before that we're also operating in a marketplace where the rise of crypto assets and the increase in non-verifiable users of the financial system is taking place through the crypto world. So I have wondered, is there a use case here that would allow us to have more transparency into the crypto market? Because for the life of me, I've not been able to understand why we think there is no potential for terrorism risk and the use of the financial system by terrorists with products that allow for anonymity.
Thanks, Elizabeth. And I think that's a good segue to Alexander, who also has the global view of the ecosystem. And I would ask two questions. The first is on use cases and how vLEI sees those. And also perhaps the second on the scaling of the vLEI ecosystem and how you view that.
Sure. I'll start with the digital asset space, as it has been my space for the last 7 years before joining vLEI. And I agree 100% with what was just said in terms of that industry or that technology will not be usable in a regulated way without identification, without proper understanding on who do I deal with and also what do I deal with. And let me explain what I mean there. So one of the things that we are focusing on as this new way of exchanging value is developing, so stable coins, digital securities, any type of digital assets really on permissioned or public chains, all require to be executed in a responsible and compliant way requires to understand multiple things. You need to understand whether the wallet you will deliver an asset to has been KYC'd properly and who is behind that wallet, or at least someone needs to know who is behind that wallet, and the person delivering needs that wallet has been KYC'd. That's the first need. So understanding your counterparty in a way. That's for AML consideration. That's for, the FATF recommendation 16, so everything to prevent AML and financial terrorism. You also need to understand, am I dealing with a regulated asset or a legitimate asset? So who is the issuer of that asset? That's another use cases for the use of LEI and vLEI in smart contract directly. So in a token, you would be able, if you apply the vLEI to that construct, you would be able, anybody, to verify that a token they're dealing with is and has effectively been issued by the entity it pretends to be issued by. And that's important because there's a lot of fraud at that level as well. And another important component is when you are using those assets on decentralized finance systems or services like a swapping system or a lending platform, how do you know that that lending platform, which is also a smart contract-based infrastructure, is managed by a company it pretends to be managed by? So it's a bit like sending assets to an account without knowing who that account belongs to. You wouldn't do that in traditional finance. So there is also a need to identify that if you are delivering assets to a smart contract for decentralized finance purposes, that you know that these assets are being delivered to where it should be delivered. So identity is key for the scaling of that industry, and the industry understands it to the point that they are looking at solutions, vLEI is one of them, to enable that regulatory compliance, but also simply that efficiency of use of those decentralized protocols, those digital assets, and those blockchains. So it's going in the right direction, I would say. And it will. That's the only way forward. We cannot expect scaling without having a proper identity system there. If I may also give an update maybe on the other use cases that are on our list here. So cross-border payments. There as well, we have the support of the G20, the Financial Stability Board, now the FATF, Financial Action Task Force, CPMI, so all organizations that are looking at payments in general and cross-border payments in particular, in ensuring that the LEI, in this case, will be an important component of understanding who you're sending money to and who you're receiving money from, so payer and pay information. In the future, what I predict we will see is that we will see vLEI being used as a way to cryptographically bind the owner of an account and the account itself, to prevent, to avoid this very complex validation of payee that we have to do today, which matches name and account number to ensure it's going to the right person. And that can be very easily done, very easily between quotes, by using a vLEI credential. That will be cryptographically impossible to break, and therefore will ensure that your payments always reach the account it's supposed to reach. So that's an evolution that I see for the vLEI in the future. And finally, in the supply chain space, supply chain management and supply chain finance, the same requires a global identifier that is not only to identify the entire supply chain in terms of the many actors that are involved in supply chain, importer, exporter, shippers, ship holders, etc., but also to secure data exchange and secure digital documents that are exchanged between those parties. We have conversation at the level of the ICC, International Chamber of Commerce, as well as part of their digital DSI, so Digital Standards Initiative, where LEI and vLEI are clear foundational pieces to enable what they're trying to achieve in terms of digital trade. So it's in use case wise, I think, especially in the financial and the global trade space, there is a lot of recognition that LEI and vLEI can support many of the evolutions of those industries in the future. Now it's a question of further developing the ecosystem of software, of service providers to enable the implementation and the scaling of that of that solution in those various markets. And that's what Ivan is working on, and maybe that's a good opportunity for Ivan to say a few words on how he sees the next years of vLEI.
Sure, thank you, Alex. I would add to this discussion that started around the financial services sector, that there's also two really interesting aspects of the vLEI governance structure and technology that will make it equally, if perhaps eventually even more impactful in the real economy, in the real sector to which the financial sector, of course, is bound. And that is, we speak an awful lot about the notion in the crypto world also of digital twins. We're moving into an era where things and objects and assets outside the financial sector also need to have identities. They need to be embedded into smart contracts. And increasingly, we are talking also in much broader contexts about digital trade agreements, concerns about cross-border data restrictions and protections, and a lot of issues around how to actually derive more value from data and the data economy. And none of this at the moment is really very easy to fulfill without understanding who owns or has control or has access to data, whether we can actually trust that data. And in extreme cases, when we think about AI agents playing a role, whether it be in the financial sector or in the real sector, we always come back to the same issue, which is how to identify the provenance of data and how to ensure that that data is still correct, that we can protect the integrity and verify its authenticity. And many of the processes that we've seen evolve in the financial sector over more than decades, centuries really, things like as simple as things we take for granted today, like auditors, accountants, clearinghouses, credit bureaus, are all instances actually where we've been in previous eras of technology trying to solve economic problems of how do I verify what you have verified without having to redo all these checks. And I think we're really coming into an era where cryptographically secure identity and cryptographically secure data can enable us to do that in a completely new fashion, in a decentralized way, without undermining the integrity of the system. And so that will be very relevant in instances like supply chain tracing, where we'll be tracking not just the payments, but all the other data points that need to be verified in order to both assess financial risk, but also then lead to really unleashing the potential of data exchange. So I guess, really just to emphasize that I think this is a broader problem than the financial sector. And in many ways, if we can solve some basic problems of identity and data for verification within the financial industry, probably starting in those white spaces with lower switching costs, if you like, that we will also see this take up in much broader areas of the economy, particularly where we are facing constraints and risks around identity and trade across borders.
Thanks to Ivan, and I will give it over to Anders if he has any closing thoughts on that. Obviously, as an innovative company, you're always thinking about use cases and how the product will evolve over time. So I'll give it over to you to close this segment.
We are, as a QVI, a bit more pragmatic than all the others. We have to make the money. We have to somehow make this into a solution. And what I would like to say is that a lot of people believe that this is something that we are theoretically talking about. It's somewhere in the future. The future is here. We have this technology. We know it works. We have proven it. It is just a matter of actually doing it. And I think the regulators have also quite a big responsibility in this, because it simplifies the decision-making for everybody else if some state-governed party actually decides to use this technology of different reasons. So that is my hope, really, to get a kickstart out of some regulatory changes, because that is exactly what has happened with the LEI. People might not believe that, but if they think that LEI is just used for regulatory reporting and things like that, but it is actually an information vehicle that is being used by clients for many different reasons today. So I will close out there, and maybe Rickard has a small comment to make.
Yeah, no, I totally agree, because this is the traditional chicken and egg problem, that probably a big use case would help the whole ecosystem a lot. And I believe that we will see it within public sector or market infrastructure. And some of that market infrastructure can also come from a really large bank or a really large consortium of banks in a trade finance platform or a credit bureau or something like that. So we will focus a lot on commercially supporting larger endeavors within financial infrastructure, or of course in the traditional regulatory and supervisory space.
Thank you, Rickard, and thank you everybody for a very enlightening discussion. And with that, I would like to wish everybody a good rest of the day.